Hi, everybody. Can you hear me? Welcome. Thank you for joining us for the Monetary Policy Committee statement. And as we did last time, the members of the Monetary Policy Committee are part and parcel of the presentation and are available to both answer questions and make a contribution. So what I would like to do, starting with the approach we've taken, is to first of all look at the global context, very briefly. In essence, the global recovery has continued with relatively strong performances in many of the emerging markets, particularly China, and the emerging markets are expected to underpin the world's growth. And the global environment as a whole, especially in the developed world, remains benign from an inflation perspective. However, there are risks and vulnerabilities that remain, particularly in a number of countries that are in the euro area. Unsustainable fiscal positions, as well as a need to reverse previously unconventional monetary policy interventions, may also pose a risk to the global growth outlook. Turning to domestic developments, in essence, just to reiterate that the bank operates in a flexible inflation targeting environment that's forward-looking. If we looked at the CPI numbers for November 2009, we came in at 5.8%, just below the upper limit of the target. And the inflation forecast of the bank is predominantly unchanged. CPI inflation is expected to increase to above the target range, around 6.5% for December and January. And though that would be primarily due to technical base effects related to petrol price changes, and moderate somewhat thereafter. Inflation is then expected to return within the inflation target on a sustained basis and to average about 5.4% to the end of the forecast period, at the end of the forecast period. Electricity price increases of 25% in 2010 and 2011 is the assumption that has been made by the SARB. The outcome of the ESCOM application is expected to be announced in February. This remains an upside risk, and the second-round effects could be underestimated. Inflation expectations are generally unchanged. Both business and trade unions respondents continue to expect inflation to remain outside the target range. The forecasts of analysts are for within the target range over the next 2 years. If we look at demand conditions, the demand-side pressures on inflation remain persistently weak and pose no significant upside risks to the inflation outlook. Real final consumption expenditure by households has been contracting since the third quarter of 2008, and this weak trend appears to have continued in the final quarter of 2009. Real retail and wholesale trade sales growth are still negative. New vehicle sales continue to show some signs of improvement, but remain weak. Demand is likely to be constrained by employment trends, access to credit, and high debt levels. Employment levels have decreased by 110,000 jobs during the third quarter of 2009, despite a more favorable growth performance. And employment and the addressing of employment and unemployment is expected to lag the growth recovery. Credit extension to the private sector reflects the weak demand and tight supply conditions, and is also seen as a constraint on spending. Total loans and advances to the private sector contracted on a year-on-year basis in each of the 3 months to November. Only mortgages recorded a positive but slow growth. Credit extension, there are indications that the stricter lending criteria applied by the banks may be easing. Impairments are still rising, but at a slower pace. Impaired advances have risen from 84.1 billion in November 2008 to 134.7 billion in November 2009. High levels of household debt remain a constraint, and the ratio of household debt to disposable income stands at 79%, slightly down from the 80% previously. However, there are a number of positive signs. House prices are showing positive, though moderate growth Equity prices have recovered but are still volatile. The growth outlook has improved. We saw a 0.9% annualized GDP growth rate measured in the third quarter of 2009, and we would see what happens when the GDP numbers are released in February. However, the recovery is expected to remain somewhat subdued and below the potential growth rate for the economy for some time to come. The bank's forecast for GDP growth is that GDP growth will average 2% in 2010 and 3% in 2011. This implies that it could take some time until pre-recession levels of output are reached. Continued positive trends are seen in the composite leading business cycle indicator, which increased strongly again in November. The manufacturing sector has also shown some signs of recovery. The Kagiso Purchasing Managers Index reflected a positive outlook in November and December. However, the manufacturing sector may be constrained by weak domestic demand, while external demand will be impacted by the strength of the global recovery, as well as, in part, by exchange rate developments. We are mindful of the impact that a strong currency has on sectors of the economy. But with regard to inflation, the rand has remained a positive factor from that perspective. Much of the volatility of the exchange rate during this period can be explained by general volatility in the international foreign exchange markets. Emerging markets in general, including South Africa, have had significant capital inflows, putting upward pressure on a number of emerging market currencies. This imbalance needs careful monitoring, as what we have seen is a wall of money seeking yield, and there remains the risk of sudden reversal. There is a generally more favorable outlook if one looks at international oil prices, which appear to have stabilized somewhat over the past months. But moderate increases have been assumed in the forecast period. The outlook for food price inflation, as reflected in producer and futures prices, is also favorable. These prices are unlikely to pose an upside risk to the inflation outlook for some time, despite higher food prices in international markets. The risk to inflation outlook emanating from wage developments appear also to have subsided somewhat. Wage settlements are still in excess of inflation, but are declining in nominal terms. Average nominal remuneration per worker and unit labor costs have both declined. Electricity price increases remain the single biggest risk to the inflation outlook. There is the risk that increases granted to Eskom could be markedly higher than those assumed in the bank's forecast. There is also the risk that second-round effects of these increases may be underestimated by the forecast model. Taking all of the above into account, and noting that inflation is likely to remain close to the upper end of the target range over the forecast period, the risks, in our view, the risk outlook remains fairly balanced. In terms of this, we see electricity price increases posing the biggest upside risk. This is counteracted by the weak state of the domestic demand. Taking all that has been said above, the MPC decided to keep the repo rate unchanged at 7% per annum. Thank you very much, and we are open to questions and comments. Yes. Sorry, can you speak up slightly? You can shout. Thank you. Okay.
Okay, just a quick one. Busa reckons that Eskom's 35% price hike could probably add 1.2% to CPI. Do you think that's a fair assessment? Do you agree with it? And is there a possibility that Eskom has not done its job properly and that there may have been other alternatives?
I don't want to comment on the specific number that is being used. I think that we are extremely concerned about the impact, and I think that needs to be made very clear. We've done the running of the models for us on, as we've said, the agreed hike that Eskom has been, that we know Eskom will get at 25%. We have done variations of above that level if they were to be granted and what the impact is on the economy, and we have shared that with the National Treasury. and expressed our views on that. I think that as part of the Reserve Bank, it would be improper for us to answer specifically about whether this is right or wrong or Eskom has done its job. That is its engagement with the political bodies and through NERSA. NERSA is still conducting public hearings, and I'm sure just as BUSA has put its view forward, so are many others. So there can be no doubt that there's real concern about the impact of a 35% hike on the economy, on the second round effects, and in terms of inflation. But as to the specific numbers, I think it would be inappropriate for us to comment.
Governor, Nompusi Ziba from SABC News. Just wanted to ask, what's the update, if any, on the task team discussion on monetary policy?
The discussions about monetary policy, as I understood, is that there is a task team that has been set up under Minister Pravin Gordhan, and the issue there is to look at what is the framework, inflation targeting, how that works. We have had a couple of meetings with the Minister already. We are discussing the broad framework. Obviously, what he would like to say about any of these matters will come in the budget speech. But in terms of the ongoing interaction, we have 3 working committees with the National Treasury. We have bilateral with the Minister. That is very much in place at the moment, and the ongoing discussions around all of these issues. So the outcome would be reflected as work in progress, because there's certainly no conclusion at this point in time. But whatever needs to be said about that will be said by the Minister. Yes.
Mary Misa from Business Day. I've got a couple of questions. One is, if the government were to decide to introduce a growth and employment clause into the central bank's mandate, would this have any real effect on the way policy decisions are made, given that the bank applies its mandate in a flexible manner? I was also wondering whether you could give a view on what the weakening of the rand in the last week has to say to people who were saying that it was too strong and that steps should be taken to weaken it. Does this not show that perhaps market forces are the overriding concern here? Thank you.
Perhaps this gives me the opportunity to ensure that my colleagues also have something to say today. So perhaps, Daniel, you'd like to address the second question on the weaker rand. In terms of policy and mandate, I think it's speculative to ask whether if they've introduced a question of growth and employment clause. The core function of a central bank, whether there's an inflation targeting environment or whether there's an explicit framework or an implicit framework, is in fact to deal with inflation and countering inflation. That is the core mandate of any central bank in the world. That's its purpose. If you looked at our constitution, it says very clearly that we must look at the questions of price stability in the interest of sustainable development and growth. So that the factors that we have to take into account are there. And that's what we do. I think I've outlined in what I presented earlier the range of the conversations. This is a very brief summary of the condition of the issues that we consider, that we look at in depth, that we have real discussions about. So these factors are certainly taken into account. I would not like to speculate on different changes in mandate. I think that the core issue remains the task of a central bank. What is important, and I think it's important for the public to have an awareness of, what it is a central bank can do and what it is a central bank is not. It's not part of what its task is, and where other responsibility lies in the whole of the economic cluster. And I think those are important discussions to have. In terms of the mandate, that is still a subject that obviously people are interested in, and as I've said before, we are very willing to engage and discuss how the central bank has the confidence and the credibility and the support of the public in the recognition that we do our job fairly, independently, but taking into account the needs of the country as a whole in terms of what our responsibilities are. Daniel.
Thank you, Governor. I don't have any specific message for people that might have been calling for a weaker currency. All I could just say is that I think the movements that we saw last week was indeed just a reminder how quickly things can change, and the adjustments that we saw, much as they weren't that major in magnitude, as you probably are aware, had to do with issues around concerns that led to risk aversion with regards to the measures that were taken in China and questions that they raised for what the strength of the global recovery might be. There were issues around plans that were announced in the United States about how the sizes of banks and their ability to take risks going forward could be curtailed, and the ongoing concerns around some of the European sovereigns as far as their debt levels are concerned. I think those type of issues just served to send us a reminder that the rand can be quite volatile, and these adjustments can happen fairly swiftly when there are trigger events in the market.
Any addition that anyone would like to make? Other questions? Yes, sir.
Vernon Vessels with Bloomberg News. I just want to check if you can give us, I have two questions, if you could maybe give us some insight into the discussions at the MPC. Did some of the members raise the possibility of an interest rate cut or an increase? And then if I can ask a second question, do you think the interest rates are low enough to sustain an improvement in consumer spending?
In terms of your first question, it was not a unanimous decision. There were very strong views in terms of an interest rate cut. In the end, we agreed that at this point in time, the prevailing view was to hold for all the reasons indicated, and perhaps as that gets clarity or things change, we would change our minds. There was no discussion of an interest rate increase, but obviously that is something that depends on the data and what happens in the future. So certainly this was not a unanimous decision, and there were definitely views about an interest rate cut. I think that in terms of your second question, are interest rates low enough for, I think that our first answer addresses that as well. I don't think there's anything to add. Let's go with people who haven't asked yet, at the back. Okay, well, the mic's here, so we'll go here first and then there.
Kali Nayo from E-News. Governor, I just wanted to get a comment from you on calls by the ANC for the Reserve Bank to be nationalized.
Okay, let me just clarify one thing. This is a Monetary Policy Committee press conference. And I think it is very important that the matters do not get conflated. There are issues that affect the South African Reserve Bank, and there are issues, as today, this is a Monetary Policy Committee press conference dealing with that, the discussions and the issues and the decision that we've taken. However, given that there has not been an opportunity by me to address the issues that affect the bank yet, for this press conference only, I will take one or two questions in that regard. As regards this question of nationalizing, I think there's been a lot of discussion about it. I think that the public is aware of the shareholder activism that has been taking place in the bank. And I want to reiterate, the central bank is there for public good. It's an institution that is not for profit. It may make a profit, and the profit, if it is made, goes to the government, or 90% of it goes to government. And therefore, that is one issue, and how we address the shareholders who are acting in a manner that they would like to receive a different dividend and access to the resources of the bank in a different way, is to reiterate that this is not an investment in the same way. The intent behind the ownership of the SARB was a limit of 10,000 shares per person, because the idea was to have a very widespread public ownership in that sense, or it's not even ownership, interest in the bank. And therefore the discussions about whether it should be nationalized or what, I think the ANC itself has clarified that matter, that this is something that they did not even discuss. And my view is on that matter, you should refer it to the Secretary General of the ANC. As far as we're concerned, the current shareholding prevails. Yes, there are issues around it. Those things need to be addressed. But it's a legal entity. Nobody actually owns it in that sense. And it's there as an institution, enshrined in the Constitution, acting for the public good in the interest of all South Africans. Yes, sir.
Tsepo Moe from SABC News. I just want to find out what was the reason for the MPC not to wait for the CPI numbers to come out. That could have helped you in making your decision.
Well, yes and no. And let me answer briefly, but perhaps also ask some of my colleagues to do that. The decisions should be forward-looking. A decision of where the CPI comes out tomorrow, those decisions are part of what we've taken 12, 18 months ago, is what impacts. The forecasts are relatively, are predicting that it will be about 6.4, 6.5%, and we will see what the numbers come out at. Yes, you would always like to have the next number, and it's always helpful to have the next number, but there's always the next number. So that at some point you have to say, this is the dates we've set, this is when data gets released. Sometimes it's in your favor and it comes out just before, so you can see what it is. But as I said at the beginning, inflation outlook is forward-looking. The decisions you take have an 18 to 24-month time horizon through which they proceed through the economy. So that those numbers, if you're going to be hung by the numbers that just come out, you do not actually address the question of looking forward in the way that you should. So the other way would be, okay, this number's coming out, let's change the MPC from today to next day. And that makes a lot of uncertainty. The dates are set for the year. We've tried to take account of that in terms of data releases, but they don't always work because there's always another data coming out. So I think that addresses. Perhaps somebody else would just like to add to that. Anyone? Any other? Wait, let's just see if there are any other new questions. If they're not new ones, then we can come back to people who would like. Miriam and yourself.
Thank you, Governor. It's kind of a technical question, but I was wondering, in the trade-weighted basket of currencies which the central bank monitors against the rand, the euro still has the biggest weighting by far, but Europe is no longer South Africa's main trade partner. Is there a case now for tweaking or looking at the weightings again? Thank you.
Mondi, did you want to deal with that? We were discussing it earlier.
Yes, thank you, Governor. In terms of the trade weighted, the euro remains the largest trade partner of South Africa. Yes, indeed, there are things that have changed in terms of export destination. That China, for example, has taken over to the euro area in the last 11 months, if that is compared with 2008. Yes, in terms of export, it is the largest destination, China, and indeed the Asian market. But there is not going to be change in the trade weighted for now, because that is still based really on mining production or the mining data. So we don't plan to do that because the trade weighted is based on the manufactured goods and services.
Just to go back on the nationalization issue, a very quick one. Are you concerned or at least worried about the kind of signal that, state control of a bank would send out to the rest of the world? And do you personally think that maybe the ownership structure should change? Should you perhaps broaden your mandate as a bank?
Ownership and mandate are two very different things. And I think the mandate question I've answered already, in that the mandate is something that there are questions being raised. We're very happy to engage with those issues that anyone would like to raise on the mandate. But the core function of the central bank is to tackle inflation. So yes, you want to take other things into account. Let's talk about it. Let's see what it is. But you can't do everything in the central bank. So we're very happy to participate in those discussions. As regards to ownership, I think I've explained that already. It's not about the ownership structure. A central bank is not a bank in the same way as commercial banks. I think they're very different discussions. We're one of very few central banks that are publicly owned or have shares, people who own shares in the bank. And I think that if there was to be a discussion about how this works, I think a lot of the issues there have been set out very clearly. The structure of the shareholding does not, government itself already, it determines in many ways the ownership the control rather than the ownership. The independence is guaranteed in the Constitution. The government appoints the governor and 3 deputy governors and appoints 3 members of the board. The board has 7 members. Private shareholders appoint the other 7. The governor has a casting vote. So that the essence of the balance of where your authority lies already lies with the government appointees. So I think that this is a discussion that there's no reason why it can't be held as to what is the nature of the ownership. It's been held in many countries because a lot of countries have moved from private shareholding into an ownership by government, or an ownership in the same way as the Reserve Bank is held, where it's actually not owned. It's a legal persona. It's not owned in that sense. So my view would be, as I said, if you wanted to get views on why it's being raised, you need to go to the ANC. As far as we're concerned, there are definitely issues around the perceptions of some shareholders. That does not necessarily address or affect the way it is held at the moment. I can see you want more than that, but that's my view on it. So you're not going to get whether I like the positions or not, because that's not relevant. It really isn't. The bank is owned in a particular way. It's managed and run in a particular way. That's determined by the Constitution and the framework, and that's what we go with. Anyone else? Yep.
Governor, I think you did answer the question that I'm going to pose, but I'm going to ask it again for clarity.
No. Well, you can ask it again, but I'll either give you the same answer or say I haven't
just want to be
it.
sure.
Yeah.
I just wanted to ask, is this the end of the rate-cutting cycle in South Africa?
I think when I answered you that our discussions reflected that there were a number of MPC members who had a strong view that in the current circumstances it would be important to cut rates, indicates that there is thinking that there is room for cutting rates among some members. The decision at this point in time, as I said, not a unanimous decision, but the prevailing decision is that we are holding rates where they are because of the upside risks. And don't for 1 second underestimate those upside risks. If you take the discussions, you're all familiar, you're journalists, you're looking at what the discussions on Eskom is, and we've said very clearly that we see this as the biggest upside risk to the inflation target and to the inflation environment. Don't forget, this isn't about a question, although it is the measure, the accountability comes through the target. The purpose is to contain inflation. And inflation is very bad for society, for poor people, for everybody. That's the objective, and we've got to weigh these things up. So is it the end of a cycle? I think that's not the way I would put it. I would say we weigh up the data at the time, we have open minds, we look at what the issues are, we allow information and data to influence our thinking. We don't come with preconceived notions. So I wouldn't be able to say to you it's an end of a cycle. No, not at all. Am I saying there's going to be a rate cut? No, I'm not saying that either. I'm saying we will weigh up what is occurring in the economy, what the data is telling us. And you've got very responsible people in the Monetary Policy Committee. So we will exercise our minds and take a decision accordingly at that time. Anyone else? Anything that anyone would like to say? No? Hey? XP? No one? I've said it all. Okay. Thank you very much. Then if there are no further questions, thank you for coming and attending. This is the venue that we'll be having the press conferences in the future. I hope you find it perhaps a little bit more user-friendly, and we will certainly do our best to see that we can meet your requirements as the media in that regard. Thank you very much for being with us here today. Thanks to the presenters. Thanks to the Monetary Policy Committee members.